Welcome to the Top Producer Podcast with Farm CPA Paul Neefer. The Top Producer Podcast challenges farmers to think differently. Farm management, tax issues, policy implications, and more. Gain your competitive advantage on the Top Producer Podcast.
Welcome, everyone, to the Top Producer Podcast. This is Paul Neefer, your host, and today we're going to have a conversation with Steve Bruere from People's Company. I think this is the third time I've had you on. Does that sound about right, Steve?
Your memory is better than mine, but that's probably about right.
Yeah. So, shoot, I'm just trying to think when we've known each other, what, maybe 10 years now, something like that. Oh, no, it's more than that because you had me speak on the 2014 Farm Bill for some of your clients, and that's almost 12 years ago. So it's been quite a few years.
Yeah, I'd say 12, 13 years. I know that large transaction you got us involved in and how we got connected out in Walla Walla was in 2016. So we met sometime before that.
Yeah, exactly. Yeah, time sort of flies. I sort of view time these days as BC, before COVID. I'll say, well, that wasn't that long ago. And then I realized, oh, it was before COVID. So that's at least 6 years now. So it's getting crazy. But before we get started, just for the listeners out there that maybe don't know who you are, maybe just spend a couple minutes, just quick background, where you grew up, maybe went to college, how you got started with People's Company, and so on.
Yeah, no, happy to. So grew up on a farm south of Des Moines in Warren County. My dad and brother still farm together. My grandpa ran the Ford New Holland dealership in Warren County, and my folks were Pioneer seed corn dealers. And so grew up in the middle of agriculture. I always loved farmland and real estate, and got my real estate license while I was in college back in 2003. People's Company, the firm I run now, started out back in the 1960s as a farm management department for a bank. We were spun out of the bank in the 1970s and then ran as an independent mom and pop real estate and farm management business in central Iowa. They sold the business in 2002, the year before I was graduating from college. And my real estate professor's neighbor bought it, hired me, and then I came on board in 2003 and quickly got thrown into the fire and had an opportunity to take over running the business at a pretty young age. And so for the last 22, 23 years now, I've really been expanding People's Company outside of Iowa. And today we operate in 35 states, manage farms in 25 states, and have a lot of diversity to the business. We work on assets all over the country. So I always say anything from wine grapes in the Pacific Northwest, almonds and pistachios in California, to rice and cotton in the Delta, and of course, corn and soybeans in the Midwest. So a lot of diversity of the types of assets that we get to work on.
I actually had a podcast that I did a taping yesterday with a farmer in South Central Idaho, and we were talking about potatoes. I've never really have had too many. I maybe have had one or two other farmers, but we actually dug into the fact that I'm going to say Midwest farmers are maybe a little spoiled. I mean, you plant the corn, you might spray it once or twice, and then you harvest it. Whereas with potatoes, I mean, you might be going through that field once a week or once every 2 weeks with certain passes. So
no question, and I've really, I'm an Iowa farm kid and my family farms here, so I can pick on ourselves a little bit, but we've got great soil and we've got great rain events, and we have too much water. So in a lot of cases, we're trying to figure out how to get rid of the water. And when I remember the first time I came out to Washington, and I think you were probably at that first trip I made out the fall. And what do you have? 100 different crops in Washington State, and you've got all sorts of different management practices around water, whether it's irrigation districts or wells, and in some places, 7-8 inch rainfall areas. And so every ounce of water is valuable and precious. And what you learned real quick is that there's a lot of places that are pretty hard to farm, and it requires a lot of management and skill set that actually forces you, I think, in a lot of ways to figure out how to get the absolute most out of it. Where in some of these places where water and soil is abundant, you don't have to challenge yourself quite as hard as you do in some of these other parts of the country.
Yeah. But again, I grew up in near the Walla Walla area, and my parents and I still own farmland there that raises wheat, and we really don't do much work at all. I mean, Mother Nature does most of the job, and in a good year, we'll hit 150, 170 bushels on wheat with no irrigation. It's just Mother Nature doing the job. So
Well, that in that Palouse wheat country, I mean, I always say, out in that Walla Walla Palouse area, it's like Champaign County, Illinois for wheat, right? It's
yeah,
got similar characteristics.
yeah. So I think maybe we'll start off with your firm has done a lot of work with sort of how to value land and so on. I think you have an internal product called FarmWorth. Maybe you can explain to the audience what that is and what your goal or maybe what the future of that might be.
Yeah, when I got into the real estate business in 2003 to go put a farm on the market or understand a farm, you had to drive to the county assessor's office to get the property tax information, and you had to drive to the county FSA office and an RCS office and get your soil book, right? You remember those old soil
Yep.
um, surveys, and then if you wanted to calculate what your soil rating was, you had to get the color pencils and markers out and do your own weighted soil ratings. And there was no Google Earth, there was no drones, there was no online assessor websites, no surety mapping systems with your CLUs from the FSA office. So it was an all-day event just to go look at a farm. And as these digital tools have evolved over the last 20 years, there's now a lot of different service providers who have digitized a lot of the information that's related to farmland transactions. And so we've been customers of a lot of these firms through the years, Camo Egg and Acre Value and Acres and Land ID and
Yep.
Surety. And so there's a lot of great tools out there. And what we started to recognize is that we were going to all these different sites and maybe pulling a piece from each site and then pulling it into one collective piece of information. And there's a lot of data loss. You'd log out of one site into
Yep.
another site. And we decided that we wanted to build our own internal platform that could be our single source of truth for all the properties that we interact with and become part of our business workflows. And so this has been a big effort. We've been working on it for a number of years, but we rolled out a platform probably 2 years ago called FarmWorth, and it's internal to People's Company. But we've taken all the property assessor records in all 50 states, and then we've brought in floodplain maps and CLUs and assessor records and all of the different soil maps and topography maps and crop history maps. And so now our business workflows for everything that we do in the organization, everybody starts out in this FarmWorth platform. And now I can click on a farm and in a matter of seconds, all those things that I told you used to take a day to go track down are available to you in just a number of seconds. And so what that's done for our business is it's allowed us to cover a larger geographic area. And phone call comes into the office and you've got a lot of information at your fingertips real quickly without ever going and seeing the farm. So it's a really powerful tool, and it's been a long journey to get it rolled out. And then one of the things that we have as part of that, we created this farmland insights engine that's on the People's Company website. And we worked with Dr. Sherrick at the University of Illinois, and we aggregated all of the RMA actuarial yield data for crop insurance on what your top crops are. And then you can start to look at what insurable revenue and insurable crops are in each county in the US. And we have the trend line yield data. So it gets really interesting to look at that trend line yield data. A lot of people look at farmland and say, well, where's the appreciation come from? How are we going to continue to have appreciation? Well, most of your counties in Iowa and Illinois, your trend line yield growth are about 2 to 3 bushels per acre over the last 50 years.
Yeah.
So you bought a farm 50 years ago, you're growing, 100, 150 bushels more per acre on a lot of these farms. And that's where that appreciation comes from. Well, that's a hard thing to communicate, but now we've got that data right at our fingertips, and we've got all the USDA average land values and average rents by state and by county, and average soil ratings and appreciation rates from USDA. So then you can start to look at this and make really informed decisions. So a lot of neat stuff happening.
And that part of it is accessible on your website, is that right?
Yeah, so you can either get to it the website that's internal to us. You can go to it's farmworth.com, and there's a video on there that kind of demos the platform, and then there's a link there to the People's Company website where that Farmland Insights engine is. So if you go to farmworth.com, you can get to it, or if you go to peoplescompany.com, you can get to it as well.
Okay, good, good. Now, you've been doing oh man, the Land Investment Expo. Of course, I remember when Trump was there the first time, well, I guess the only time, but announcing back in, what would that be, 2015, or
I
was
think
that?
that was 2015. Yeah.
Yeah, so and that wasn't the first Land Investment Expo, but so what number is coming up in January of 26?
Yeah, this will be our 19th year of hosting the Land Expo, which is pretty wild to think about. So it's we're getting up there.
So so in 27, that'll be the 20th one. So you'll have to do something special for the 20th.
You know, Becky in our office who runs the event, and then Eric O'Keefe, the MC from the Land Report, they both told me they were going to retire at year 20. So we'll see if that holds true.
Maybe that's like dog years, 20 years of land investment is like 80 years. So
There you go.
but so who are some of the keynote speakers that you have coming to the event this year?
Yeah, we're still getting everything firmed up, but somebody on the program that's been here a few different times is Peter Zehan, and he's always been a huge fan favorite, geopolitical strategist, and people love to hear Peter. We've got a guy, Ronald Diamond, and one of the things you're seeing is a lot of high net worth families and institutional capital and family offices come into farmland, and Ron runs this business called Diamond Wealth, and they do a lot of work with family offices, and so it'll be really interesting to just get their perspective. There's a lot of capital that wants invested in alternative assets like farmland, and people like farmland because it's non-correlated with public equities and it's positively correlated with inflation. So getting a little bit of the perspective of that family office group that a lot of people hear about but don't exactly know what it
What?
means.
Yeah, yeah.
Yeah. And then we're bringing a guy, Joel Salatin from Texas
Oh yeah,
in.
yeah,
And, with the Maha movement, obviously there's a lot of controversy around, our food system. And he's probably on the end of the spectrum that would be more on the Maha
yeah, yeah,
side. And
yeah.
so, but as you know, we like to bring in different perspectives and give people things to think about. And so I think Joel will be a lightning rod of a speaker for us. And then we got a guy, Ed Yardini. If you're
Yep,
a
yep.
CNBC watcher, Ed's on there frequently, and an economist, and runs a firm called Yardini Research. And so those are the four so far. We've got a couple big keynote names we're trying to lock down, and continuing to build the program out.
Well, good, good, good. And again, that's January 13th, if my memory is right.
You got it. Yeah. And then one thing we're doing this year, we're adding a little segment on the Monday before. So the 13th is the full day Land Expo. And the Monday before, we're doing a farmland masterclass for, I think that's 12 to 3. So a real in-depth, what investing in farmland means and how it works. And so that'll be a new thing that we add on this year.
Well, I'm flying home from Hawaii on Sunday the 11th, and plan to be on a plane from Denver to Des Moines on the 12th. So I'm definitely going to be attending. So
Little temperature adjustment there for sure.
yeah, I've been a couple of those land investment expos. I know it was minus something or other when I tried to go to the airport. I do know that.
Yeah, the year I remember the year we had Boone Pickens here, it was like negative 17 degrees. And of course, he was in the natural gas business, and I think he was pretty excited about it.
Exactly. And I was there for Boone's event. You had the sort of the sit down discussion with Boone. So
Yeah.
but now you had mentioned a little bit on the FarmWorth, the digitization and so on. What do you see happening with AI and how that interacts with a lot of that, whether it's your information or farmers' information? What do you see the trends in that area?
Yeah, it's pretty wild. I mean, first of all, I don't even know how to use AI. I'm not smart enough to figure it out, but I know my kids are. And so I
Yeah.
kind of, hear them talking about it. And, one of the things, and we're working on this actually, I just don't know how to talk about it completely, but, when you think about all the effort that's gone into digitizing information around farmland, so think about all that RMA actuarial yield data I was talking about, the USDA average rents and land values and NCCPI ratings and those sorts of things. Imagine a world where you can come to our website and say, hey, show me all the farms for sale in the United States that are in a county where the average insurable corn yield is above 190 bushels per acre, but the average land value is below 10,000 per acre,
Yeah,
right? And
yeah,
start to
yeah.
think about, finding arbitrage in the market and things like that. So I just think, the first step, you can't really utilize AI until you first digitize your information.
Yep,
And
yep.
so that's the first step, and that's been the grueling effort that we've been going through over the last 5+ years, is getting all of our information digitized. And now we're starting to talk about putting that AI layer over the top of it, which I think is going to be really powerful.
Yeah, no, I agree. I mean, just, I'm a sort of a tax guy, and I now subscribe to two separate tax AI services, and one, they both do a good job of finding data. I just find that one does a little bit better job of writing the answers, so that's sort of the key, is you don't want to just regurgitate the data. You want to actually make it so people can understand it. So definitely one service does a better job of that.
Yeah, it's both exciting and scary all at the same time.
Yep, yep, yeah. Go back to what is it? Hal was the computer that took over the world, and people do worry about that. So, but I think Steve will go ahead and take a break for a sponsored message, and we'll come back and talk about a few other things. Welcome back, everyone, to the Top Producer Podcast. I'm Paul Neiffer, your host, and we're going to rejoin our conversation with Steve Bruere from People's Company. Steve, we've seen that the commodity pricing for almost all, I'm going to call it crops, not the livestock side. I mean, if you're a cow-calf guy, you're doing pretty well, but certainly, and it really doesn't matter whether you're corn, soybeans, rice, cotton, apples, cherries, wine grapes, almonds, and so on. A lot of those crops, certainly we have lower prices and higher input costs, but we've sort of seen stickiness on cash rents and stickiness on land values to some degree. So, like I say, you're in multiple states. You see those trends. What do you see on the land value side?
Yeah, I mean, it's there's a lot of anxiety out there, clearly, and just depending on what part of the country you're in. You mentioned apples. I mean, the apple growers have been losing money for a long time, and there's no end in sight. And
Yeah,
and so, I think a lot of guys are talking what 3, 4, 5,000 an acre in losses on
yep,
apples, and it's rather depressing. Like, you can wake up and do everything right and be an excellent operator, and even then come up short.
yep,
Using apples as an example, when you think about farmland as an inflation hedge, well, permanent crops suffer, and the labor costs go up, and the irrigation costs go up, and the improvements go up, and then you throw the tariffs in on top of that, and most of your apples go to Mexico and Canada,
yeah,
and so yeah, you have your costs going up and your exports going down, and then little overproduction as well.
yep,
And so the numbers I'm seeing are, what, 25,000 acres of trees need to be removed to right size the market. And so then, of course, that, kills asset value. And so, yeah, there's pain out there. The guys in the Delta, the cotton farmers are getting hit really hard right
yep,
now.
yep,
I was out in Napa a couple weeks ago, and the wine grape industry, but same sort of story as the apples. Too much production, consumer preferences change, so the
yep,
baby boomers are drinking less wine as they age out, and then the young people either are drinking seltzers and other alternative drinks, or they're just not drinking at all.
yep,
And so
yep,
and yet all this production coming out of COVID, when capital was cheap and everybody was sitting at home drinking wine, and now all that production's here, customer base has changed, and so there's a lot of grapes that don't have a home right now, and so that's pretty tough market. And then corn and soybeans. I think Obviously, the soybean market, there's a lot of anxiety over that getting shifted to South America, and farmers see that happening. So there's not a lot to be excited about right now, other than livestock, as you said. And yet, the other thing that's happening is, the farmland has an inflation hedge, and this week gold hit a record
Yeah,
high,
yeah, yeah. And
and
I have some
so
gold, so
yeah,
I'm
well,
happy about that.
you're
So
doing better than me then.
yeah,
But you look at a chart of inflation and you look at a chart of farmland, and they're identical.
yeah,
And so you're in this environment where the people that are in public equities, there's been a lot of money made in artificial intelligence and Bitcoin, and I think a lot of people agree the stock market feels pricey. And so, farmland as a non-correlated, diversified asset from the stock market makes a lot of sense to people. And then if you have this fear of inflation, then farmland is where you want to be. And so you've got the anxiety on the farmer side, but then you've got this outside capital that's saying, hey, I want diversification and I want inflation protection. And land values seem to be hanging in there pretty decent so far. But you've got higher interest rates as well, and so I don't know how it's going to play out, Paul. Spent a lot of time thinking about it and talking about it. We've got 16,000 acres that we're going to auction over the next 60 days, and
oh,
so
so
I'm going to feel either really excited or really depressed or somewhere in between, 60 days from now, to see how the market reacts to these sales. But about 40% of our volume happens in the fourth quarter, and
yep,
so we
yep.
know a lot more about where the land market really is here, as we head into the end of the year. But there's pressure on land values, but on the flip side, when people don't like the price of their land, they just don't sell it. And so, nationwide, it's the leverage against farmland's at 14%.
Yeah,
So you don't have forced stress selling like you do in a lot of cases, if say commercial or residential. If you don't like the price, you just don't sell it. Well, then there's less inventory available for everybody else. So then that keeps the price higher, because
yep,
people just
yep.
don't let it go. And therefore, I think land values, while you might look at a spreadsheet and think, okay, they should come down, the reality is that it's probably not going to come down to the degree that you think that it really should.
Yeah,
And
because you still
and
have
I
an excess demand out there that's going to keep it up.
yeah,
So
I think so. And then if you believe, as I do, that USDA is a little optimistic on their yield estimates, and you kind of think there could be a couple more rate cuts coming this year, from the Fed, and you think there's some Trump bucks coming, uh, all of a sudden, you could have an entirely different outlook on the world here, 90 days from now too. And so I think there's a lot of people that are saying, hey, let's not make rash decisions. Let's let this thing play out. And I think a lot of people are optimistic that things might improve here, in short order.
well, and I've heard some rumors of maybe bankers indicating to their farm clients they're maybe a little bit more on the edge. Maybe you need to sell a quarter section or something. But I think a lot of those tend to be private transactions where they have an investor that hey, I might have to sell this. Are you willing to buy it? And then lease it back to me in a long-term lease. I think there's a lot of that sort of keeps the value up too a little bit in there, Steve.
For sure, and we do a lot of those transactions, a lot of sale leasebacks, and that's the one thing I would say about these strong farming areas like the Midwest, where you've got that strong land ownership by farmers, a lot of generational wealth, and yeah, maybe there's a year or two of tough net incomes on the farm side, and so a lot of those guys will go sell an 80 and recapitalize and kind of live to play again. I think that's where, when you get like down in the Mississippi Delta, you don't have quite as
Yeah.
much generational wealth. You don't have as much land ownership from your farm tenant base. And that's where you might see a little bit more pain in other areas of the country than you're seeing in the Midwest. We're tracking all the Chapter 11 and Chapter 12 bankruptcies, which is the family farm
Yeah.
bankruptcy. And I was just looking at this morning. There's 86,000 acres of farmland in the U.S. that we're tracking right now. that is in a Chapter 11 or Chapter 12 bankruptcy. And that sounds like a big number, but
But
it,
it's not.
it's not. No, and it's something like 212 bankruptcy filings. So there's some pain out there, but I read a lot of these headlines that we're all seeing, and 20% of farmers are going to file bankruptcy, and
Yeah, yeah,
and
no.
I don't think I think that's a little overblown.
Yeah. Well, and I think we also have to realize that if you sort of look at farming in a 5-year chunk, if we took the last 5 years, 22 was one of the best years we've ever seen. I mean, as far as being a row crop farmer, even 23 was pretty good. So if you sort of averaged it together, yes, 24 and 25, maybe not so good, but 22 and 23, you averaged together, it still wasn't that bad, as long as they didn't blow it in 22 and 23.
Yeah, for sure. And some people did, right? And
Yeah.
and a lot of other people didn't. And I was looking at this, like if you go back to 2013, last time the land market really peaked and then commodity prices dropped, land rents slowly came down in 14, 15, 16, 17, and land values slowly came down 14, 15, 16, 17. But the trend line for farmland values was still up.
Yeah. Yeah.
You just had a little dip there. And, I think a lot of people had a lot of confidence that they wanted to buy land in 12 and 13 when corn was $6. I think if you look back, you wish you would have bought all the land you could have bought in 14, 15, 16,
Yep.
and
Yeah,
17.
exactly.
It,
Exactly.
you dip below that trend line. And then of course, if you live to see it through, then by the time you got to 17, land values started to appreciate again. And I think this probably is a similar environment. Land rents slowly unwind, land values unwind a little bit. And then something changes geopolitically or with interest rates, and there's a weather event or whatever it may be, and
Things.
you're right back onto that trend line.
Yeah. Or like in my case, we have a COVID event, and I was able to buy land in Iowa for during COVID at $5,600 an acre. So, and even at that point, I was like, is this like the dumbest thing I've ever done? And then, 6 months later, I'm like, man, I should have bought more, so
You always should have bought more,
yeah,
Paul.
yeah. No, I have that disease. So, but let's talk about something might be a little bit more fun, or maybe not. But you do have a little bit of an investment in a winery business called Capital Call. How is that going?
It's an interesting business, and it goes back to what we were talking about on the wine grapes. I mean, a lot of stress and a lot of pressure out there. I wouldn't want to be paying for my kids' college off of the wine business. But when I originally got into it, it's a really fascinating business because it's farming and it's growing grapes and you're selling grapes to wineries, and for me it was farming, but it was a different crop than what I grew up around. And then, what happens is you end up with some fruit you can't sell, and then you make a little juice. And I always call it a disease. I got the disease, and
Yeah.
it's,
It's
it's
like
only
a crack cocaine habit. So,
well, yeah, only curable by death is what I say, or bankruptcy.
yeah.
And so we're dabbling and making a little wine and having some fun with it. And so got a tasting room there in Walla Walla down the street from your old office,
Yep.
Paul.
Yeah.
And what's been fun about it is just learning how that business works, and then sharing that story with people here in the Midwest, and kind of in a non-pretentious way, because the
Yeah.
wine industry is full of a lot of
Oh,
pretentiousness.
yeah. Yeah. Yeah.
So yeah, it's fun.
Yeah. It's like the old saying, how do you make a small fortune in the wine business? You start with a large one. So there's a lot of truth to that at times.
That's a
So,
fact,
but
absolutely.
well, is there anything else you'd like to add before we sign off?
I think this was a pretty fun conversation. I think you hit a lot of points there, so
Yeah. Yeah. No.
I
And
appreciate you putting me on it.
and believe me, this won't be the last time we have a conversation, but I think you and I have always been fairly optimistic on land values. Like I say, we'll have dips and so on, but you know, we know there's pain out there right now, but it's nowhere near like the 80s where I went through the 80s. Now, I wasn't a farmer, but I dealt with farmers that had to go through the 80s, and this is nowhere near that yet. So
Yeah, I was born in '81, and so I didn't get to really live through or have to live through the 80s, but there's some similarities. I mean,
Yeah.
higher interest rates, and of course it was the Russian grain embargo back then, and now we got the
Inflation, high inflation, oil crisis, and so on. That all was part of the process.
yeah, but it's a different world. The crop insurance system now, 94% of the acres in the US have a minimum revenue guarantee associated with them.
Yep.
A lot of federal government support built into these farm program payments. And so, I think the interest rate thing is, definitely going to impact land values. Everybody's adjusting to the new cost of capital.
Yep.
And I do think, we probably lost some of our soybean demand permanently to South America. But you still have the same global demand for
Yep.
soybeans as you
Yep.
had without the tariffs. It's just getting rerouted and in a less efficient way.
Yep.
And so, yeah, I'm optimistic. And there's a lot of things too with liquid biofuels and the 45Z tax credit that if we do kill demand permanently from China, hopefully we can backfill that with some domestic use and create some jobs. And the big beautiful bill's filled with lots of incentives
Yep. Yep.
to build things in rural communities. So, if you step back a little bit and just have a little faith that these guys are going to figure it out, easier said than done, trust me. But I always like to joke around about the Louisiana Purchase. If you go back to Louisiana Purchase, I backed into this one day. Iowa traded at 3.6 cents per acre.
Yeah. So.
And I always say everybody who bought a farm since then thought they paid too much,
Yep.
right? And,
Yep.
and here we are, well over $12,000 an acre statewide average now. And so, and since the Louisiana Purchase, there's been a lot of geopolitical issues that have happened, and farmland just keeps kind of going up. And so there's if you have that long-term time horizon, there's not a better place to be than farmland.
Yeah, totally agree. Again, with that, that's a good stopping point. So again, thanks a lot, Steve. And this is the Top Producer Top Producer Podcast. And this is Paul Neiffer, your host, signing off.
Thanks for joining us. We'll see you again soon for another new episode of the Top Producer Podcast. Be sure to like and subscribe, and remember, all episodes are available on Farm Journal TV and anywhere podcasts are found.